Hey everyone, today we are diving into the world of alternative assets. We're going to go way beyond your typical portfolio.
So, when you think about investing, do stocks and bonds immediately pop into your head? Well, if they do, you're not alone. But there is a whole other universe of investments out there, and I mean everything from private companies to, yes, even rare coins.
To really get what makes an investment alternative, we first have to understand what's considered traditional. For most of us, this is the familiar ground, the foundation of our financial future.
And those are the big three, right? You've got stocks, which are basically a piece of a public company, bonds, which are like loans you give to a government or a corporation, and good old cash. They are the absolute bedrock of modern finance, but they are far from the whole story.
Okay, so that brings us to the big question. When we use this word alternative, what in the world are we actually talking about? Let's pin down a definition.
And the definition is actually super broad. If it isn't a stock, a bond, or cash, well, it's probably an alternative. And this category has just exploded, partly because for a long time, low interest rates pushed investors to hunt for better returns anywhere they could find them, even outside the usual spots.
And these alternatives? They have some pretty distinct traits. Low liquidity just means you can't always sell them in a snap. They also tend to have higher fees and can be way more complex. But honestly, the most important feature, the real secret sauce, is their low correlation to the stock market. That means when stocks take a nosedive, these assets don't always follow, which is exactly why they're so attractive for diversification.
And when you see them side by side like this, the trade-offs become crystal clear. Traditional stuff is usually easy to sell, cheaper, and pretty straightforward. Alternatives, often the total opposite, harder to sell, more expensive, and a lot more complex. It's just a completely different ballgame.
So let's explore some of these. We're going to start with the real heavy hitters, the kinds of assets you typically find in the portfolios of huge institutions and the super wealthy.
First up, real estate. It's an absolute giant in the investment world. You can make money from rent checks coming in and from the property's value going up. Now, obviously, buying a whole building is tough, but regular investors can get in on the action through things called REITs, which are basically companies that own properties. And you can buy shares in them just like a stock. Or you can use ETFs, which are like baskets that hold a whole bunch of different REITs all at once.
Next, we've got commodities. I'm talking about the raw materials that build and power our world. Oil for energy, gold as a safe haven, even agricultural products like corn. Their prices are all about global supply and demand. You know, a drought somewhere could make wheat prices shoot through the roof. You can invest through ETFs that track commodity prices, or even through more complex things called derivatives.
And then there's private equity. It's exactly what it sounds like, investing in companies before they're on the stock market. Think about the venture capital firms that gave money to companies like Google or Facebook when they were just starting out. Because these are private companies, this has traditionally been the playground for the big guys, institutions, and really wealthy investors.
And of course, hedge funds. These are private funds that use all sorts of complicated strategies, like betting that a stock's price will go down, to try and make money no matter what the market is doing. They are super exclusive and known for a pretty unique way of charging fees.
This is the legendary 2 and 20 model. So here's the deal. Hedge funds charge a 2% management fee on all the money they manage, no matter what. But on top of that, they also take a 20% cut of any profits they make for you. It's a structure that is all about rewarding big wins. Okay, let's totally switch gears. We're moving from the big institutional world to something a bit more tangible, something you can actually hold in your hand. Let's talk about passion investments. Yeah, we're talking about collectibles. Things like fine art, sports memorabilia, rare wines, classic cars. They're called passion investments because they often start out as hobbies, but man, can they turn into serious financial assets. Now here is the huge difference. Unlike a company that makes a profit or a building that brings in rent, a collectible doesn't generate any income. Its value is based entirely on one thing: what someone else is willing to pay for it. That's it. And to see just how valuable these things can get, here's an incredible example. Bill Gross, a legend in the bond market, was also one of the world's best stamp collectors. In 2024, he sold off his collection. Any idea how much it sold for? $19.2 million for stamps. That includes one single super rare stamp from 1868 that sold for over $4 million all by itself. Just wow. And the stories just keep coming. Take a look at this coin, the 1794 flowing hair silver dollar.
People believe it is the very first silver dollar ever made by the U.S. Mint. It's literally a piece of American history.
And in 2022, one of these coins fetched $12 million at auction. The value isn't the silver, right? It's the rarity, the history, and the incredible story behind it.
So, okay, after going through everything from hedge funds to historic coins, what's the big takeaway for an investor? What does this all mean?
Well, it really boils down to this, a simple list of pros and cons. On the plus side, you get real diversification away from stocks, and yeah, the potential for some seriously high returns. But on the downside, these assets can be a real pain to sell, they come with hefty fees, and they're often complex and fly under the radar of a lot of regulations.
And that right there is the bottom line. Alternative assets can be a fantastic tool to diversify your portfolio, but that benefit doesn't come for free. It comes with its own unique set of risks and costs that every single investor has to think about carefully.
Which really leaves us with one final question for you to ponder. When you think about your own financial future, it's worth asking, to step outside that familiar world of stocks and bonds, what is the true price you're willing to pay for diversification? Thanks for joining me.